to weigh in on the markets and how it is likely to move going forward, we are now joined by Sumit Bhatnagar, who's the fund manager of LIC Mutual Fund. Hi, Sumit. Thank you so much for taking the time out and joining us today. Sumit, so the big news for the day is, of course, Operation Sindoor. And keeping with that, historically, we have seen that every time that, such an event has happened, whether it is Pulwama or the Kargil war, we have managed to recover post that reaction coming into these big events. From here on, given the fact that the macros are poised positively for India, do you see this recovery to come on now after this event, and how do you see the markets moving from here on?
First of all, thank you for having me on the show. Um, with this event out of the way, now the ball is actually in Pakistan's court on what level of escalation they do. Going by history, we do expect markets to now move back to the usual trajectory. We are cautiously optimistic on the markets over short term. We believe that leaving aside the global uncertainty, Indian macros are shaping up pretty well. And with the steps that government has taken insofar as your budget was concerned, or the liquidity infusion measures that were taken, or the regulatory easing that was done, we expect our economy to perform decently from here on. And we think 6.5% type of a GDP growth is definitely a doable. As also, we expect decent earnings growth going forward, led by the measures that the government has taken.
All right, that's the day coming in on the markets. Hi, Sumit. Good afternoon. This is Shrishti also joining in. But Sumit, give us a sense on the defense pack, because what we are getting to here is that definitely with the kind of news flow that we have, these counters once again come back in flavor. And what I see is that you also have a good allocation to some of the defense counters, almost a 4 to 5% allocation when it comes to a large mutual fund holding. Do you believe maybe positionally it's a time, or maybe this pack could do well, at least in the near term?
So, definitely, we view defense as a structural opportunity. The government's focus on indigenization, plus the focus on making them the export platforms, is a very structural story to play out. While in the near term we can say a lot of positives are priced in, but the opportunity definitely exists both from indigenization and export perspective. While we have substantial deployments in the defense space, maybe it's time to take some profits off the table in near term.
Also, so Sumit, tell us, in the next leg of rally, what can we expect? Who can be the market leaders? Because once the churn happens, we have seen the banking and the financial names taking the lead. In the last leg of rally. Now, after the consolidation, what can be which sector can be the leader going ahead?
We expect consumption to pick up from here on. The kind of steps that government has taken on the tax cuts that have happened in budget, which should have support your urban consumption. Plus, the liquidity measures should lead to reduction in interest rates. Plus, the benign inflationary environment, the way inflation has cooled off, all these should support your urban consumption. At the same time, your rural consumption should get support from your uh, good crop expectation, normal monsoons, decent reservoir levels. So we expect FMCG, from which has been an underperformer for last 18 months or 24 months, to start showing some bit of a pickup in both volume terms, as also some bit of an improvement on margins as well.
All right, but Sumit, give us a sense that any changes or tweaks that you have done in your portfolio, especially in the last quarter, given the fact that the markets were quite volatile. We did touch upon a couple of these sectors, from financials as well as defense, but what were the additions and deletions looking like for you?
See, for us, the key deletion or key reduction in weight was around IT, as also a little bit of profit taking across the capital goods space. While we added positions in our BFSI, as also some bit of positions in FMCG, which even now we are looking to build positions in as we get the right valuations. Insofar as the market cap wise allocations go, we have trimmed some positions in mid and small cap space, while we have added the allocations to large cap space.
Right, Sumit, point taken. But talk to us about the sectors that could see, a re-rating coming in on the cards and a scope for earnings growth ahead.
See, first of all, re-rating, I would say markets are broadly fairly valued. So, it would be difficult to say a particular sector getting re-rated. We would rather focus on individual stocks where there is a earnings visibility, where there is a tailwind appearing. There we see select pockets where we can see re-rating. But at a sector level, uh, we believe most of the sectors are fairly priced at this point in time. And insofar as earnings growth are concerned, we do expect a decent earnings from your consumption theme, your BFSI. Defense also should post decent earnings, and sectors like cement should do reasonably well.
Within cement, I just wanted to understand, Sumit, that how should one try to nibble in and pick up the best stock suitable? Why so? Because we have seen the sector going through a lot of consolidation, the bigger players getting bigger. Price was one such area which was not sustaining, but for the last 3-4 months we are seeing the price hikes happening, and the good part is they are sustaining too. But cement as a pack is divided within the regional players as well. So where should one start looking at? Maybe go with the leaders in that, or maybe some regional players can actually do well.
See, insofar as cement is concerned, rather than taking individual names, I would suggest a barbell type of a strategy where you play the segment leaders on one end and uh, companies where there is a significant or companies that are likely to benefit from the price hike that we have seen in in the regions like south or east. So it can be a combination of these combination of large cap and mid or small cap company based in these sectors. And if someone is still looking for compounders, then even companies based out of North and East can be looked at as a state compounders.
All right, thank you so much for taking the time out and joining us and weighing in on the markets. We will let you go on that note.
If you like this video, then like, share and subscribe to ET Now.